Hello, Paula. How are you? I hope you're doing fine wherever you are. I guess you're in Mozambique. I don't know which part of that. Okay, that's fine. Fantastic. Um, all right. Let me just go to our week one. MA. Okay. Uh, I'm trying to get to the assignment which you talked about. Okay. There was a question. There was a question. You said question 8. Yeah, question 8. Unfortunately, can this present the question in a manner that shows everything about it? Let me see. I'm using a phone here, so sometimes it's not showing up. It's not showing up. Yes. Okay. I saw it. I saw it. All right, we can as well do the trick. Let me just take the view of the student. Yes, I think this one is now better now. It's now better. So the question is say, what is the double entry for the following in an integrated account system? So the integrated account system is that system that incorporates both the financial accounting part as well as the costing part or management accounting part. All right. So when something happens in the production area, it is both recorded um, in the costing system as well as updated in the financial accounting system, something like that. Okay. So we are told here that we need to record the double entry um, for two things here. First of all, production overhead absorbed in the cost of production. Okay, we need to record uh, the movement or maybe the changes that occur in the production overhead when it is now being incorporated into the cost of production. The overhead, when we compute the production overheads, we normally use those the overhead absorption rates or those computations, if you still remember. Okay, we would normally doing what is called absorption costing, but now we then want to record this into our financial system. So there was a diagram which I presented in the notes, if you still remember, that when an account is receiving something, we debit that account. Okay, remember, these are expenses or they are costs. So when costs are being increased, we debit them and we credit that account that is, from which those costs are actually moving. Okay, if they are moving from production overhead to work in progress, so to production, it means that we are going to debit the production account and credit the production overhead account. All right, so currently they are in the production overhead pool or overhead um, account, but they are now being, because production is now taking place. So if production is now taking place, the account that is responsible for the recording is what is called work in progress. Okay, we call that there is now work in progress. There's something that is happening in terms of production. So that account that is receiving these costs is the production, the work in progress. That's the technical name. So in this case, if you know that technical name, that okay, when production is taking place, so there is work in progress. All right, there is work in progress. Okay, so if there is work in progress and the work in progress, the account that is receiving those expenses, it means that we have to debit the work in progress account. So is there that portion? So obviously, you're going to debit work in progress control account. Okay, I think this is the first thing we have to do. But so because the work in progress account is the account that is receiving, so which account is giving? Obviously the account that is giving, that is to be credited, is the production overhead account, which is going to be credited. Remember the double entry, there is a debit entry and a credit entry whenever a financial transaction occurs. Are we together, Paula? Are we together? Okay, good. Now we are in the work in progress account, but we are then told that things are not going to remain in the work in progress account forever. They need to be completed, they need to be finished. Okay, the production process has to end at some point in time when we now have finished goods. Okay, so now we are being told completed work transferred from the production process to inventory. Now after the work in progress, after the production process is completed, we have what are called finished goods or inventories. We now have inventory or stock that is ready for sale. So in that case, now the account that is receiving is the inventory account, isn't it? Or the finished goods account, or the closing stock account, something like that. So we now have finished goods. So the finished goods account or the inventory account is receiving. So that's the first debit you have to do. So you are going to debit the finished goods control account, which is that column. So we are going to debit that one. Remember, that's the inline, that's in the same line. Okay, you are seeing that, isn't it? Good. So we are debiting that. And then we are crediting what? We are crediting what? Because these finished goods have come from the work in progress account. So obviously we are going to credit the work in progress account. This is very simple, isn't it? So work in progress, yes, we are crediting the work in progress. I think this is the third column we are seeing there. No, this one was only saying, the third column is saying credit work in progress, and it stops there. What is that? So obviously we are going to credit the work in progress control account. The control account, remember, is maintained in the financial accounting system. So we are going to credit work in progress control account. So this one is going to be our answer. Yes, remember we are talking of these yes, yes. So we are going to credit the work in progress control account. Good. Yes, yes. So that's it, isn't it? Great. If the explanation has satisfied you, please just give me a thumbs up. If you still need more explanation, please let me know. Thank you for now.